Well, again, welcome everyone. Thank you for joining us today uh, as we continue our series of webinars in preparation of our conference next June in Budapest on freedom, subsidiarity, and the spirit of gift. And our first one was on public debt. And so certain logic, we now consider taxation. And taxation is probably, or our duty to pay taxes is one of the very clear obligations in the gospel. Actually, Jesus's distinction between the temporal sphere and the spiritual sphere is based on a question on whether we should pay tax. And our Lord answers in the affirmative. And St. Paul also teaches the same. And it's something that we as citizens feel very strongly, both on the side of those who receive help through taxes, as well as those who contribute through their taxes, something that really touches us in a very personal and practical manner. And so it's rather surprising that when we look at official church teaching, there is relatively little on taxes and taxation. We do find occasional references, but especially in the modern magisterium, there's actually quite little. So all the more important is the task of theology and of Catholic social thought to reflect on these subjects. So we're very happy to have Professor Dr. Robert Kennedy with us today. Dr. Kennedy is professor and former chair of the Department of Catholic Studies at the University of St. Thomas in Minnesota, where he was also for many years a professor in the Department of Management. He's the author of a number of essays, book reviews, and articles on a variety of topics such as professionalism, business ethics, military ethics, and just war theory, ethical investment, and a variety of issues related to culture, public life, and the Catholic social tradition. He's a named contributor to The Vocation of the Business Leader that the Pontifical Council for Justice and Peace published in 2012, which is now in its 5th edition, now published by the new dicastery for promoting integral human development. His book, The Good That Business Does, was published by the Acton Institute in 2006 and translated into Italian in 2014. And his book, Justice and Taxation, was published in 2018. So we're very glad to have you with us, Dr. Kennedy, and please speak to us on paying our fair share, justice and taxation.
Thank you, Father Martin. Thanks for the introduction, and welcome to all of you who've joined to talk about such a fascinating and exciting topic as taxation. So I admire your courage. I want to begin with a few statistics, or at least some numbers. Why this topic? Why should we talk about this topic? Well, Father Martin has mentioned that it's germane to a conference that his organization is sponsoring in Budapest next summer. But there are other reasons for us to be concerned about it. Let me just put some things in perspective. The gross domestic product of the United States, the estimated total of the value of all the goods and services produced in a year, is thought to be about 21 trillion rather in 2020. The national debt in the United States is about the same. It's 99%, a little bit above that. So if we were to commit the entire value of all the goods and services produced in the United States in 1 year, we might be able to retire the debt. It gives us an idea of how large that is. The budget for the federal government for 2020 was about $6.6 trillion, or about 31% of the entire value of the goods and services produced in the country in that year. In addition, the cumulative budget of state governments was about 2.1 trillion, or another 10% of GDP. In addition to that, Congress is debating the expenditure of additional trillions of dollars over the next decade. So to paraphrase a famous socialist, whether or not you are interested in taxation, taxation is interested in you. What's your fair share going to be? That's what we're going to talk about. There are several questions I want to raise in the context of the discussion today. One of the questions has to do with what grounds the right of government to demand and levy taxes from citizens and residents. Another is, how should the burdens of taxation be distributed? Third, of course, is what is a fair share of the tax burden and how is that determined? Do the wealthy and high-income taxpayers contribute their fair share in taxes? And finally, is it unethical for individuals and organizations to take advantage of tax preferences, some people would call them loopholes, in order to reduce their tax liabilities? So, government and society, what grounds this right? The Declaration of Independence in the United States says, we hold these truths to be self-evident, that men are created equal, that they are endowed by their creator with certain unalienable rights, that among these are life, liberty, and the pursuit of happiness, that to secure these rights, governments are instituted among men. The general purpose of government then is to establish and secure the instrumental common good of civil society. Though I want to be clear, other elements of society also serve this goal. Government claims the right to levy taxes on the members of society necessary to support its proper and delegated activities in service of the common good. We'll talk more about that. Government has a variety of roles to play. Some of the roles are proper to government. In other words, government almost always plays these roles in different countries and usually plays these roles exclusively. So these are such things as enacting and enforcing laws. In many societies, including the United States, this is done on several levels: federal level, the state level, even the local level. Diplomacy, international diplomacy, defense. Of course, we have national armed services, but we also have state guards of one sort or another. Managing currency, although it's interesting to see, isn't it, what will happen in the future with cryptocurrencies and how that may affect the ability of government to be the exclusive manager of currency. A variety of policing, judicial functions, and so on. But there are also delegated roles. Citizens are free to share or not to share a number of responsibilities that belong to society as a whole, but are not properly and strictly functions of the state. So those include providing welfare benefits. Often these are shared. There are private charitable organizations as well as government agencies. Education, again, in the United States, private education on every level as well as state education. Medical care, postal and public safety services, as well as maintaining infrastructure. And a number of other things can be delegated. In some countries, the management of communication services, television, radio, are public government roles rather than private roles, and so on. Energy generation, all that. The responsibility of a government to support the common good is the foundation of its right to levy taxes on the community and of the corresponding duty of individuals and organizations to pay these taxes. Now, I want to emphasize again that, strictly speaking, government is not responsible for every aspect of the common good, but only for those aspects that are the object of its proper functions, and those functions delegated to it by citizens. Excuse me. One of the things that happens in most countries is that government over time seeks to expand its sphere of operations. It's partly to push back against this, that in the 20th century, the Catholic Church began to speak about the principle of subsidiarity, which is a principle that demands respect for a variety of organs within society. And it particularly requires the state not to seek to drive out these organs from their proper functions, but to respect those functions and to assist them whenever possible. Corresponding to the duty of taxpayers to pay tax is a duty of leaders of government, both to respect the limits of its functions, again, the principle of subsidiarity, and to be prudent and moderate in spending. Now, how should the burdens of taxation be distributed? Well, very generally, a system of taxation is a plan for distributing among a population the burden of supplying the government's need for revenue. We'll talk a little bit more about how that breaks down. In the United States, the system of taxation is not centralized, but operates on a federal system, a state level, and a local level. So taxpayers may owe taxes to all three levels of government. The dominant form of taxation in the United States, and in most countries these days, although it wasn't always so, is tax on both personal and corporate income. But taxes may also be levied on real property, and often on real estate. They may be levied on personal property. There's a discussion about establishing a tax on wealth as distinct from income. We may tax events, excuse me, such as sales. We may tax products like alcohol and tobacco. We may tax services, or frankly, anything else imagination suggests. The history of taxation is full of very creative attempts to assign obligations. And some countries, sometimes in the past, taxes were levied on the size of windows in homes. And as soon as you begin doing that, windows become smaller. If you levy a tax on the square footage of the first floor, the ground floor of a home, people begin to build homes with larger second floors, and so on and so on. One of the things this illustrates, by the way, is that taxes always distort behaviors in some way or another. Taxes always change behaviors. People change the way in which they behave in order to moderate their liability for tax. In a republic, citizens, in my judgment, and I think this is consistent with the Catholic social tradition, are free to determine who will be taxed, what will be taxed, and at what level it will be taxed. But there are issues of fairness in all of this. Especially with regard to those with fewer resources, one principle of distributive justice should take account of the ability to pay, and this should guide taxation. Now, properly speaking, I want to clarify this. Distributive justice concerns the proportionate distribution of benefits or burdens by an authority in a community out of what belongs to the community to give or to impose. Other ideas of distributive justice are current, but in the Catholic social tradition, by and large, distributive justice concerns the capacity of a government to distribute what it owns or to distribute burdens that it is its right to impose. So, for example, it's not a function of distributive justice to take wealth away from one group of people and distribute it to another group of people simply in order to equalize the possession of wealth. Could talk a little bit more about that later. There are three general purposes of taxation. One is to raise revenue for the activities of government. That's fairly obvious. But in the modern world, we've also used taxation as a form of regulation. Excuse me, I've had classes all morning and my voice is getting a little soft. When we regulate, we use tax to influence otherwise lawful private behaviors or to collect revenue to be used to offset public expenses incurred by these behaviors. Now, sometimes we seek to encourage certain private behaviors, the purchase of, these days, there are tax benefits for purchasing electric vehicles, for instance. Or we want to discourage certain kinds of behaviors. So we put additional taxes on alcohol and tobacco products, for example. A third purpose, but we won't really talk about it today, is redistribution, where we use taxation to remedy inequalities in wealth or other goods. This is different in intent from providing welfare benefits to take care of the poor or those who are in unfortunate circumstances. All of these problems or purposes can prompt questions about what's just and what's unjust. For example, in the context of revenue, we speak about progressive taxation. Most countries engage in some sort of progressive taxation of income. One of the few things the Catholic Church has had to say officially about taxation is that households with low incomes should probably pay a lower rate of income tax in order to leave them with more money to cover their basic expenses. But in point of fact, there are two tails of progressivity. One tail concerns those of low income, but you can imagine a system of taxation in which we reduce the burden on people of lower income. We have to decide what that level would be, but that everyone above that level of income, let's say, pick a round number in the United States, adjusted gross income of $50,000 or more. Everyone above $50,000 in income would pay the same rate of tax. But of course, that's not what we do. What we do is we adopt a second tail of progressivity, which is increasingly higher rates of taxation, marginal rates of taxation for higher incomes. I think in the United States now we have something like 7 different tiers of taxation. So we not only give those with lower income a lower rate than average of taxation, but we impose a much higher rate than average on those with higher income. One of the things that progressive taxation eventually poses to us, though, is a problem about citizenship and participation. It isn't immediately obvious, but the problem is this, that persons who pay very little or perhaps nothing in income tax don't have a stake in the same way in decisions about public expenses. If you have no reason to believe that your taxes would increase by a proposed set of public expenditures, you have less interest in moderating the choices of government to spend. There is an argument to be made for saying that every citizen should pay taxes at some level, even a minimal level, to confirm participation in the community and an ongoing concern for the public good. We also have what have come to be called regressive taxations, and these are taxes that take no account of the level of income or wealth. So in many jurisdictions, sales taxes, for example, fall into that category. In Europe, value-added taxes take little or no account of ability to pay. In the United States, Social Security and Medicare taxes are more or less in that category. Taxes on real estate are generally in that category. So we sometimes have the awkward situation where a family might inherit a piece of real estate, a house, perhaps a farm or a ranch, and be unable to keep it because the level of income that the family who inherits has is insufficient to sustain the very significant real estate taxes on that piece of property. Sometimes that's by intention, sometimes it's an unintended consequence. In the case of revenue, we also have decisions we need to make about what to tax. We may tax products like alcohol and tobacco, not to discourage their use, but because, for instance, we see that in a local community as a way of raising revenue from events that are in the community. We can tax tickets and all sorts of things. There's virtually nothing that it would be immoral in principle to tax. What matters is how you tax it and who bears the burden of the tax. In the context of regulation, we have another set of concerns. sometimes we impose regulation to discourage disfavored activities which are not themselves illegal. This often happens when we can't expect that the legislature will vote to make certain activities illegal, that they'll vote to outlaw smoking or the drinking of alcohol or things of that sort, but we want to do something to discourage it. Sometimes too, we create tax preferences in order to provide incentives to people to do certain things. Often to purchase certain kinds of products to benefit a struggling industry. Again, we give people incentives to buy hybrid or electric vehicles. That's unlikely to continue forever, but we want them to do it to begin. Sometimes we have less noble reasons. We subsidize favored industries that are very good at lobbying, for example. Sometimes we tax certain things to provide a barrier to entry and reduce competition. Tariffs are a kind of tax that we have sometimes imposed in order to diminish foreign competition. One of the things, though, that we need to think about, and often don't, is what professionals in this field call the incidence of taxation. In other words, on whom does the burden of taxation actually fall? One might think that by taxing an industry, it's the shareholders and the owners of the businesses that bear the burden of the taxation. But often these industries are able to pass on the additional costs to consumers in the form of higher prices. So the incidence of taxation in the end falls on consumers rather than players in the industry. We also have another sort of unintended consequence that we hear about in the news. That unintended consequence is, for lack of a better term, the exploitation of an array of preferences, many of which are incoherent with respect to one another. So we do see individuals of higher wealth who are very careful and have reason to be careful about identifying tax preferences that lower their tax liabilities. Now, it's entirely legal, but they may be able to lower their tax liabilities quite significantly. And it's because Congress and state legislatures have passed these tax preferences without regard ultimately to how a set of them might be used together. By the way, I find it interesting that the term of art in tax accounting is not tax preference, and certainly not loophole. The term of art in tax accounting is tax expenditure, as if by providing a preference and reducing someone's tax, this is actually an expenditure, when in fact it's a decision not to collect a certain tax. Now, let's talk for a minute about what a fair share is. We hear a lot from politicians about groups of people who are not paying their fair share. And we could fund a great deal of things in a country if only the wealthy or people with higher income. That's not the same, by the way. Some people may be wealthy but have low income. Others may have high income but very little wealth. Income is a flow, wealth is an accumulation. They're two different things. The guiding principle generally in all of this, and it's a principle at law, is that members of a duty, or members of a society have a duty in principle to pay taxes. They don't have a duty to pay the highest possible taxes. They have a duty to pay the taxes that the law prescribes and that the law allows. Now, no one has a duty, an actual duty, until the legislature acts to enact a tax code. In other words, you and I might have a duty in principle to support government, but we can't act on that duty until government tells us what our share of a tax burden would be. There is no such thing prior to legislative action as an abstract standard for determining a fair share. We have a number of proposals. Now, most countries these days they rely principally on a tax on income and with a graduated set of marginal rates on levels of income. But we could have a flat tax where we omit or forgive a certain level of income, and everybody with an income above that pays the same rate. There are a variety of ways in which we can do that. Setting aside extremes that put an enormous burden on people with low income or a really disproportionate burden on people with higher incomes, a fair share is whatever the legislature determines it to be. Not an abstract concept, but an active concept. Are equal taxes, regardless of resources, unfair? So regressive taxes. Well, typically regressive taxes have relatively small impacts on people. So the burden, even the burden we place on people of lower income is typically not huge. The impact also has to be considered in comparison with the difficulty of determining proportions. Consider a sales tax. If we were to peg a sales tax, the amount of tax a particular household would pay to their level of income, the difficulty of determining throughout a year what that rate would be and what that rate would be in different jurisdictions would be enormously expensive, far disproportionate to the impact on persons of low income and the benefit they might derive. They might, in the end, not derive any benefit at all because of the difficulty of managing this. Now, bear with me for a moment as we talk about just a few statistics, because I think it's important for us to consider some facts. We want to raise the question of whether the rich pay their fair share. Now, when I raise this question, I'm not arguing or advocating for anything here. The people of wealth, people of high income, more or less peacefully accept the rates of taxation they're asked to bear. But it's important, if we raise this question, that we understand what the facts are. It's not uncommon for politicians to say that people of higher income, people of wealth don't pay their fair share. I want you to see what typically happens to people of higher income and higher wealth, and you can decide whether they are paying a fair share or not. To begin, in the United States, we've had a federal income tax only since 1913. The 16th Amendment was passed. 1913 was the first year in which the federal income tax became active. What didn't even cover the entire first year. At that time, it seems so quaint for us now. At that time, the maximum rate was 7%, just under 7% because it was the marginal rate, and only applied to households making more than $500,000 in 1913. That would be equivalent to about $14 million today in taxable income. Today, the highest rate of 37% still only applies to households with taxable income above $500,000. So the taxable income today is just a fraction. The maximum taxable income is just a fraction of what it was in 1913. But the rate of taxation is about 6 times higher. So are steeply progressive tax rates unfair? Well, we can raise questions about what the motivation is. Are they punitive? Do we want to punish in some way or another, or at least lower the wealth of people with higher incomes? Are they defensive? There's an argument to be made that it's better for a republic that certain families not be allowed to accumulate enormous amounts of wealth. So higher rates of taxation on income, taxation on estates is a defensive measure to keep peace in the community. On the other hand, if the tax rates in practice are peacefully accepted by the people who are bound by them, it's harder to say that the tax rates are unfair. Now, what actually happens in the United States? In 2018, the last year for which we have these statistics, the top 10% of households with an adjusted gross income, removing all the ordinary deductions, above $152,000 contributed 72% of federal tax revenues, although they only accounted for less than 50%, about 48% of aggregate adjusted gross income. Their effective tax rate was about 20%. Now, let me interrupt this to say that I understand that there are some households, because they take advantage of all the tax preferences that are available, may actually reduce their tax liability enormously. So it's even possible in principle. It's not illegal in most cases. There are a few, but it's even possible in principle to reduce one's tax burden to zero by taking advantage of all the preferences that are available. We'll talk in a moment about whether that's unethical. But even though some may be able to do this, the households in the top 10% in the aggregate pay an effective tax rate of about 20%. Keep that in mind. The top 50% of households, which means an adjusted gross income above $43,600, contributed 97% of income tax revenue, although they accounted for 88% of the relevant income. Their effective tax rate was about 14.5%. On the other hand, the lower 50% of households contributed just 3% of federal income tax revenue, with an average tax rate of about 3.4%, as opposed to 20% at the top 10%. At the very upper end, taxpayers in the top 5% paid an average tax rate of 22 to 26% of adjusted gross income. Now, you can decide whether that's fair or not, or whether it ought to be higher. Keep in mind that the higher the tax rate, the greater incentive for households to find ways of deferring income, of taking advantage of tax preferences, and so on, to reduce their liabilities. Keep something else in mind. Households with wealth and higher income also, on average, use a good bit of their money to make investments, and these investments create jobs and provide other benefits to the community, and they engage in philanthropy. I'll come back to that in a moment. Progressive, especially highly progressive tax rates at the upper end have the effect of shifting funds from private hands to public offices. In other words, the question becomes, who decides how the money is to be invested and how the money is to be employed for philanthropic purposes? Is it families and corporations, private corporations, or will it be public officials? Just understand that that's what's at stake. Even with relatively progressive tax rates, the annual private philanthropic giving, when we include both individuals and corporations, private corporations, is just about half of federal discretionary spending. So let me attach a couple of numbers to that. The federal budget is about 6.6 trillion. Of that, all but about 900 billion, it still seems like a lot of money, doesn't it? About 900 billion is discretionary, and discretionary is defined here as spending the government is not absolutely committed by law to spend. So something in the order of $5.7 trillion constitute expenditures on things like interest on debt and Social Security payments, Medicare payments, and a variety of things the government is absolutely committed to do. Private philanthropy constitutes in 2020 about $470 billion. Private households accounted for well over 300 billion of that. So private philanthropy is still an enormous amount of money, especially when you consider what the federal government is free to spend or not to spend. Also, note that most households in the lower 50% of the income distribution have no one working full-time and have no federal income tax obligation. From the time of Aristotle, we've recognized that in a democracy, a certain dangerous temptation is for those without wealth but the power to vote to confiscate the wealth of a small number of households that also have the power to vote, but not in such large numbers. It's something we need to keep in mind. Let me finish with a couple of comments about loopholes and tax preferences. We make a distinction between tax avoidance, which is using legal means to reduce one's tax liability, and tax evasion, using deceit or other illegal means to reduce one's liability, concealing income, lying about what is income and what isn't, and so on. There are a variety of clever ways of doing this, but the IRS is pretty good at sniffing those out. Over the years, I mentioned before, Congress has enacted a wide variety of tax preferences. The estimate now is that there are about 150 separate categories of exceptions that create legal means for taxpayers to reduce their liabilities. Now, some of these preferences include philanthropy. You can deduct charitable contributions. They subsidize certain industries or pursue a variety of other objectives that Congress considers to be priorities. For the most part, there's no limit to the number of preferences taxpayers can exploit. In other words, strategies of tax avoidance. Now, it's not illegal to exploit the incoherence and vagueness in these preferences, but could it be unethical? We don't have time to get into it. We don't really want to get into it. There are a number of incoherences and contradictions in the set of tax preferences that enable, for instance, corporations. Apple Corporation has done this in Europe in very clever ways to set up sort of headquarters in name only in one country to take advantage of a lower rate of taxation, even though most of their operations are in another country, and so on. There are some important ethical questions about whether that ought to be done, even if it's not illegal. Some concluding thoughts. It's the duty of Congress to enact legislation in service of the common good. They fail in this duty if they enact preferences that give special benefits to one group or another at the expense of the common good. This is one of the downsides of lobbying, and some industries are able to invest an enormous amount of money in lobbying. The tech industry is one example. By the same token, some high-income individuals and corporations undermine the common good if they use their resources to lobby for these preferences. We have a system of taxation that assigns liabilities according to income, not wealth. Now, unless that changes, I don't think it would be wise or practical. It will always appear to some people that those with wealth don't pay as much as they should. People, journalists, and others ought to do a better job of reporting that. They also ought to do a better job, in my judgment, of reporting the facts about the demands on individuals, households, and corporations with high incomes. We have a complicated tax code, a great many exceptions. The principal responsibility for correcting these problems, politicians talk about people exploiting loopholes. No one is to blame but Congress for the presence of those loopholes, and no one has the power to correct them but Congress. So that's where the responsibility lies, and that's where we ought to ask Congress to do something about that. Now, I'm finished with my comments. I'm very happy to consider any questions you might have.
Thank you very much, Professor Kennedy. I invite you to pose your questions in the Q&A box. And Professor Kennedy, perhaps you can stop sharing your screen so that we have a full picture of you. Thank you very much. And yeah, as I wait for some, we already have some questions. Thank you for bringing all these data, compiling the data. And it's curious that in German, tax is called Steuer, which has the second meaning to steer and to navigate. And the example of the window size, I think, is bespeaks this capacity of taxes to immediately also shape society. So yeah, we all have the duty to contribute to the common good. One way, not the only way, is taxation. So here, some of the questions. I think so. There's one on a flat tax, and I think you already answered
I can
that.
see some of these. Should I just go through them? And
Oh, sure. Yes.
Here's a question. I'm not sure if others can see them. Speaking of how taxes change behaviors, would a more fixed principle of taxation, such as a flat tax, be consistent with Catholic social thought? Father Martin mentioned at the beginning that the church has had really relatively little to say about taxation. Pope Pius XII, I think, was the last pope who actually addressed this in some talks he gave. And he said two things. First of all, we ought to reduce the burden on those with low income. And secondly, governments ought to aim at leaving as much money in the hands of private citizens as they could. But beyond that, the church really doesn't have much to suggest. So a flat tax that would make provision, such as exempting a sizable amount of income at the lower end from taxation, a flat tax that would protect low-income households is not inconsistent, as far as I can see, with the Catholic social tradition. So we have a second question. Are taxes as a redistribution of income a practical, realistic method of servicing the most needy? Regressive taxes will always be the yin and yang of governmental revenue. Well, I'd like to make a distinction, and it's fairly subtle, but I think it's a real distinction. And that's the distinction between using tax revenues to relieve the distress of some members of the community and using tax revenues simply to redistribute income. Now, citizens all across the country have delegated some of the responsibility for distributing welfare benefits to government at all levels, local, state, and national. In order to fulfill that responsibility, taxes have to be collected, and that's part of revenue. It's not part of redistribution. But a tax that whose principal motivation would be to say, certain people have more money than they need. Other people ought to have more money. Simpliciter. We're simply going to take money from one group and give it to another. That's not welfare or principally helping the poor. It's redistribution. And I don't think it's a particularly effective way of helping the needy. I do think the Catholic social tradition would recommend targeted assistance to those in need that takes account of what their need is and what would be necessary to satisfy their need, to restore them to a situation in which they no longer have that need. And simply redistributing income doesn't do that. We have one about charitable contributions. It's natural for people to feel good about making a charitable contribution. Do you think that people should feel good about paying their legislatively stipulated amount of income tax? I don't see why not. I wish my income taxes were a bit lower. I think I could find something to do with the money. But by the same token, it ought to be the case, one hopes it would be the case, that we recognize that the money we give to local, state, and federal government provides necessary services and contributes to a good quality of life in our community. If we could do the same thing for less money, we probably would. I'm not sure that most of us would like to make the trade-off of sacrificing important services for lower taxes. Again, the fact that in the United States, I think this isn't true in every country, in the United States, there is an enormously high level of compliance People fill out their own tax returns. The vast majority, almost everyone does it honestly and really accepts the rate of taxation peacefully. We don't have tax riots and things like that. We've actually seen in other countries on other occasions. Another question, how does the essential relationality of humans as articulated in Catholic social thought relate to the topic of taxation? Is there a tendency to debate tax fairness as if the proper perspective is individual self-interest? Well, I suppose that tendency is unavoidable because individuals pay taxes. We'll set aside corporations for a moment. But there's also something else. It was in the 1930s in the United States that on the federal level in particular, government began providing welfare services, social services. There was a famous meeting of American bishops in which they actually debated whether this was a good idea, because it was clear to them that if government played a larger role, it would squeeze out private charitable operations, everything from the Catholic Church to the Lutheran Church and the Methodist Church and Salvation Army and all sorts of other organizations. One of the bishops actually stood up in that meeting and said, perhaps we shouldn't be in favor of this because the poor belong to us. And it's an essential part, as Pope Benedict reminded us about 10 years ago, it's an essential part of the mission of the church to engage in works of charity. Now, do we distance ourselves as Christian disciples from the works of charity by saying we pay our taxes and the government takes care of the poor and the needy? That's all we need to do. I think that's more immediately a problem. Do we desensitize people to the need for Christian disciples to play an active role in assisting the poor, assisting those in need, contributing to the common good in a variety of other ways? Will the PowerPoint slides be available online? I think that can be done, and they've certainly been shared with the Ryan Institute.
We'll make them available.
Good. A couple of questions along that line. We have a question on, do I have any comments on changes on the global floor for corporate taxes? I don't think it's a particularly good idea. Now, there are two kinds of answers one could give to that. One would be, would it be unethical to do this? It's not clear to me that it would be unethical. The second kind of answer is, would there be unintended consequences? Would it be practically beneficial to the common good to do this? I don't claim to be an expert on that. My intuition is that this sort of thing will prompt a set of changes in corporate behavior that will have some unintended and harmful impacts. It may be a remedy for certain problems, but I'm not sure we've thought through or realized at this point what other problems might be created. So I'm suspicious about that sort of thing. Look, there are countries who are strenuously trying to lift themselves out of poverty, out of a less developed status. And one of the ways they're able to do that at times is to offer a lower rate of corporate taxation. If we have a global floor that really benefits wealthy countries who have seen some of their corporations choose to find headquarters elsewhere, it's certainly going to hurt the countries who are trying to develop their industries and trying to develop their international trade. So I'm not optimistic about what may happen there. Related to that, how do I see the US corporate rate versus other industrialized nations? Well, our corporate rates of taxation are relatively high. which has, again, unintended consequences. Large corporations frequently operate internationally, and they may choose not to repatriate earnings that are created in other countries because they would be subject to high rates of taxation in the United States, which means we're not going to see investments in the United States, and other sorts of decisions are made. We simply can't behave as though tax rates don't affect behaviors. They do. And we really need to think about how those taxes are going to affect the behaviors and what behaviors we want to encourage. And it seems to me that often that isn't top of mind when we think about these issues. Another question, our tax system taxes capital gains at a lower rate than other income. Is this fair? It's not clear to me that it's unfair, because capital gains, take the kind of standard example of gains on the sale of stock. The income generated by that corporation's activities has already been taxed. And then we tax it again when the shareholder, who is in some legal sense the owner of the income generated by the corporation, when we tax the shareholder on the sale of the stock, it's taxed a second time. But again, it seems to me that one of the questions ought to be, what's the objective of all of this? Is the common good served? There's an argument to be made. I'm not an advocate for it, I'll just mention it, that when we tax a corporation, the incidence falls on the corporation's customers, the people that the corporation serves. They pay a higher price for the product, they pay a higher price for the service. So ultimately, the burden falls on the consumer, not on the corporation. Is that really what we want to do? There's an argument to be made, at least it's not obviously senseless, that it might be better not to have corporate taxes at all, but spread the burden of taxation in a different way. Are there any studies that show how a certain tax rate changes the effectiveness of a government? Fare in America is different from fare in, say, Sweden. Is there evidence on what's more effective? Honestly, I can't answer that. I suspect that the effectiveness of government has more to do with the culture of the people than it does with the form of taxation. There's, I'm Irish ancestry. I'll tell this little joke. There's an old joke that says that if the Dutch lived in Ireland and the Irish lived in Holland, Holland would be underwater and Ireland would be surrounded by dikes. There are certain national characters, certain cultures. Some people have a stronger sense of the common good. Some people have been enculturated to be suspicious about whether the common good is also their good. I think those cultures have a greater impact than the form of taxation. Have the wealthy become more or less generous over time? I think there are different ways of measuring that. I'm not sure that, I don't have figures in front of me, so I should be cautious about answering that. The intuition that I have is that generally the wealthy have been very generous, but the generosity is going to be mitigated if they're subject to higher tax rates. Lower tax rates may free up money to be given to charitable organizations. And charitable and arts organizations are often not excited to see higher tax rates on the wealthy because they know there will be an impact on what they receive. Interesting that Social Security tax is considered regressive. Looking at it, paying in with a higher income of an income of over 70,000, that's little additional payouts in retirement. True enough. while people with under 20,000 usually get back much more than they pay in over their retirement. Yes, it's a way of caring for people in their retirement. It's not simply a way of distributing income. It's a way of caring for people in their retirement. I don't think anyone who understands the system thinks that it's a good investment for most people who are employed full-time over a career. It would be much better to invest that money in another way. But it's a third rail, right, of public policy, and there isn't really much we can do about it. Final question. We do in fact have a wealth tax in America that funds local government in the form of property taxes that are based on the value of property regardless of the ability of the owner to pay. I agree with that statement. For the vast majority of Americans, their wealth consists primarily in equity in their home. Can we say that a system that imposes a wealth tax that falls primarily on the less wealthy is fair? I think that there are some aspects of that that are indeed unfair. A family, for instance, that has to sell the family home or the family farm or the family business because the wealth and estate taxes are so heavy that they can't bear that burden, is probably, that tax is doing something that we shouldn't want to do. I don't think for the most part that's a good outcome. But the question about real estate taxes, first of all, that's almost always local government. The question about real estate taxes is how do we fund what local government has to do and fund it in a reasonably fair way? And the choice we've made in most jurisdictions is to depend upon a property tax, a real estate tax. It has defects, but again, most of us accept it more or less peacefully. In Minnesota, at least, we also have a state-funded system that gives a property tax rebate to persons of lower income. So they may pay some of their tax to the county, but the state will refund some of that in a way of mitigating the harms. It's not perfect, but again, it's peacefully accepted. I think we're just about out of time.
Thank you so much, Bob. You finished 2 minutes ahead of time, so I can still thank you and all our participants for dedicating this hour to a topic that interests all of us. Taxation is interested in us in any way.
Yes.
And what I heard again and again from you is that there is this duty to contribute to the common good, also financially. One of them is taxation. We see the Old Testament is full of the obligation to tithe for the poor, the widows, the orphans, the foreigners, the priests.
Yeah.
So modern society is much more complex, anonymous, and numerous. And so we do need a public system as well. But it always has to be subsidiary, according to the principle of subsidiarity. We don't want to take away the freedom and the joy of voluntary contribution and voluntary help. So thank you so much for this PowerPoint, for the slides, and this talk was recorded. So with your permission, we will also make it available for those who couldn't be with us in this hour. So thank you to all of you who participated, and our next meeting will be in February with Professor Hittinger, and you will get a separate invitation for that. So God bless, and see you again soon.